You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
There's one risk, I think, for precious metals investors, and we could have one more market panic. We could have a very depressed autumn and winter this year because of everything going on in the economy. And once we get a restart of a bear market, we see these very high valuations on tech stocks, and that could develop into a crash again. And during such a crash, I could envision that gold go down one more time in a serious way, maybe to $1,500, maybe to $1,000.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. Today's show is brought to you by Osino Resources. Osino has been knocking out of the park with excellent drill results in the advancement of their Twin Hills Central project in Namibia. Recently, they put out some more excellent holes, such as 268 meters at 0.6 grams per ton, including 22 meters at 1.4 grams per ton. And if you understand the type of deposit that they're exploring and developing here, those are excellent results. It's a bulk tonnage project with high-grade chutes, and 8 of their most recent 10 holes came back with significant intercepts. I'm going to put a link in the show notes below so you can see that press release for yourself. And to learn more, go to OsinoResources.com, or you can find it in Toronto under the ticker OSI, on the OTC under the ticker OSIIF. My guest today is Willem Middelkoop. He is the best-selling financial author and founder of and investment manager with the Commodity Discovery Fund. So, Willem, welcome back to the show. Thank you for joining me. And as we look over the commodities market and investing in these mining stocks, I'm curious to find out what type of fund inflows have you been seeing in your fund?
Well, actually, it has been quite positive this year. You can really see we have the start of a new bull market. And I think the sentiment started to change already last year. I remember I sent out a tweet. The most easy way to follow me is through Twitter. And I sent out a tweet last year that we saw some more positive inflows. And since early 2020, we're still a quite small fund. We have assets under management of around 130 million Canadian. And now we have monthly flows of minimum of 1 million a month. And but we also have seen months that we had inflows of 3-4 million coming in. So that's quite good. And
I think in our last interview, which would have been maybe 8 months ago, your fund was at 50 million, wasn't it?
Yeah, that's right. We saw an incredible increase on our assets under management. Well, partly because of the inflows, but mainly because of the returns. We've seen some incredible returns. We're up year to date almost 70%, 70. When we take the crash in March 2020, the Corona crash, half March, we've seen the low of the year. And since that point in time, we are up over 150%. So we've been very active on the private placements front. So we've seen, well, it's an incredible year for us.
And when you count your gains, Willem, are you including the in-the-money portion of the warrants that you buy through these private placements?
When we look at the returns on our whole portfolio, we have a model where we give some value to the warrants through the Black-Scholes formula. But we also did a little research. If we look at all the financing we've done since January 2019, so that's the last 18 months, we've done 90 private placements, 90. We're up on average 170% on those, and that's excluding the warrants. And we almost, the total value of all the deals, all the money we put into those 90 private placements was around 10 million Canadian dollars. So it has been very beneficial to the returns of our fund.
Can you describe a little more, when you're looking for a private placement, there has been many offered, especially in the last 3 months, but what are some of the qualities of a private placement that the Commodity Discovery Fund would invest in?
It's very broad. Actually, I'm looking at a presentation now on my screen, which is a new play. It will go to market through an RTO, a reverse takeover. And the valuation, it's an early silver play in Chile, valuation around 3 million. And that's what we like, valuation which are real low. We made a killing this year. We were founding shareholders with Reina Silver. Reina Silver is a new silver play in Mexico, highly endorsed by Max Silver, Peter McGaw. Max Silver entered the deal by bringing one of their projects into the company, and that's Peter McGaw's baby. You might know Peter McGaw. He's a brilliant silver geologist, and he always wanted to drill the project he did his original PhD work on. And because Max Silver had this amazing discovery on another project, this PhD project of his from the past was never seriously drilled. So Reina Silver will drill that project, and I think we were founding. I know we were founding shareholders, and we owned around 7% of the company. I think we still own around 3% of the company, and we did a private placement. The first seed round, I think, was at 10 cents, and now it's trading at 90 cents and $1. So that these wins have been enormous. So we like the deals which are very early, with a very low valuations. But we also participated in private placements with Great Bear Resources, after they moved up quite a bit. So it's very broad, but we really should like the project. We really should like the valuation. And we are bombarded with deals. So I think, like I said, we've done 90 since January last year. We've done over 50 since January this year. So it's a very busy season.
You focus on the discovery hole plays. Are there any discovery hole plays that you have invested in recently that you can share about?
There's an incredible amount of discoveries out there. I know you focus on the North American markets, but we had some wonderful results in Australia. If you look at the last year, we did a financing with the Gray Resources in the Pilbara at 5 cents. The Gray has been responsible for quite a strong and remarkable discovery in the eastern side of the Pilbara. So that one comes to mind. But the problem for us as portfolio managers is there's so many good stories out there. There's so many exploration companies working on great projects. I already mentioned Great Bear Resources. Greatland Gold, also in Australia, is another great story of the last 2 years. It's an incredible, strong and large system being operated now by Newcrest, and Newcrest and Greatland Gold are working towards upgrading that project so that the production could even start in 3-4 years from now. So that has been a big winner as well.
Did you invest in QMX Gold, where they put out in the last week that 6.5 grams per ton over 73 meters, which was quite a phenomenal hole?
We've been investors with QMX for quite some time. So we already had a position before the last week's results were published. Of course, we were happy with the uptick. But I do understand why people sold and took profit, because if you study those results, it was a drill hole down dip. So they hit the best part of the mineralization. So it was the most positive outcome. And I think quite a number of well-informed investors understood that. So we haven't increased our position into that one. It's still a good project. The valuation is not that expensive. But I understand why it sold off a little in the second day and the third day.
In 2020, when you look at the new positions that you've initiated, on a percentage basis, how many have been bought in the open market and how many have you initiated through private placements?
I think half of our investments are done through private placements. We invested $7.5 million since January 2020. Our inflow has been over $10 million. So most of the new money coming in has been invested through private placements. But we also trade quite a bit around our positions. So we're quite active traders. But in a bull market, it's very hard to trade because everything you sell, you kick yourself because it would have been better to hold it. But especially now the bull market gets a little bit more mature. we're only 4-5 months into this bull market. On average, the bull markets on the Toronto Stock Exchange Venture Index takes between 7 and 17 months. So this is the 5th month, but we're always looking where we can take profit. But as said, it's tough to take profit in a strong bull market. And we do think that this bull market can play out a little longer than the average one.
Was Reina Silver your biggest winner this year thus far?
I think so. That was a huge win, but also the gray earlier this year. The gray was a huge win for us. Actually, you want to know, of course, which are the losers, and I've been looking through our database, and normally every year you have a few big winners, but you also have a few big losers. And this year was very hard to find the real losers. So we found 3. One is Cantex. Cantex is the zinc discovery high up in the Yukon, which had a huge run last year. Initially, we missed it. And then when it keeps running and running, at a certain point, we are discovery investors. So then you are afraid that you really will miss this new Voisey Bay discovery. So we took a position and ended up paying too much money for it. So it really started a large decline from their highest levels in 2019. So that's still a big loss. But actually, it's a loss of last year, one could say. Then this year we had a discovery, or what actually was also last year, a discovery by Stavely in Australia, an incredible strong copper system near surface. We still have a substantial loss on that one because I still believe this is a world-class discovery, but it's a very large and complicated system. And as you might know, that can take years to really drill it out and to really understand it. But Stavely is a company people should watch and study. And another loss this year is Nevada Copper. This is a development stage company, almost going towards production now. And Nevada Copper, of course, gold and silver had a huge run this year. Copper was lagging a little bit. Copper is starting to run now. I think copper will run over $3 per pound. But we still have a loss on our investments in Nevada Copper. We even participated in a private placement. I don't know what's going on, why it's trading so poorly. But it shows you have to spread your risk. And that's what we do in our portfolio. We have over 100 positions. We have like 75 core positions. So core position means we have over $250,000 invested. But we take many small positions. We also call them toes in the water. Once you have invested a little bit of your money in a company, you tend to follow them much more closely than when you're not invested yourself. So we have over 100 toes in the water, and there's so many exciting drill programs ongoing now, and we expect some major discoveries. And we've seen a few great discoveries in the West Africas. Chesa Resources comes to mind. Predictive is working on an interesting project. So it's a great time to be a discovery investor.
That's right. And we could talk about losers, or perhaps something like Nevada Copper could be described as a slow mover. Is that kind of how you analyze Nevada Copper? Because I remember from our previous discussion, you like these pre-production stories that get the re-rate once they get the positive cash flow. Copper, with the economy, even though it's about $3 a pound, it seems like investors aren't as hot on copper investments as they are on gold. Would this still be a hold for you in your fund, this stock?
Yeah, that's right. And we also think that we might be at the start of a period in which the inflation will tick a little higher. And I think the Federal Reserve might even start to communicate very soon that they would like to see inflation trend a little higher. And if you look at the copper stories out there and the copper valuations, the ETF, the COOPX, which is a good example to follow the copper companies, the COPX has been breaking out of a downtrend recently. So I think copper has to, we can expect quite a bit of positive trends in copper stocks. And of course, they have been lagging the precious metal space, but I think copper, zinc and nickel, they all three should do well the next year.
Willem Middelkoop has shared with me on this show twice this year that he could see the copper and industrial metals bull market pushed back a few years because of how the COVID crisis has impacted the economy and the government's response. So he could see a gold bull market followed with a copper and industrial metals bull market. In other words, we're going to have a bull market in commodities, even if it's not only gold, it'll be copper and such on the heels of a gold bull market. Would you take that view as well?
Yeah, I fully agree with Rick Rule. And that's also what we see in our portfolio. As I said, copper is lagging a little bit, but the copper stocks do very well, actually, the last few weeks. We see the same with nickel, especially the last few weeks after the comments Elon Musk made about the need to find nickel. We're involved with a few amazing nickel discoveries. One is Blackstone in Asia. St. George in Australia. Stock is not doing that well, but I think there will be a takeover situation there. And also we shouldn't forget to talk about uranium, and that's also one of our cylinders which is on fire. I think 7% of our portfolio is in uranium stocks, especially discovery by NextGen Energy. Still a very, very low valuation. Just broke out of a 3-year long downtrend. And I think that's still a great entry point for NextGen. And I think uranium will do very well as well, especially when we get a little inflation and people start to become aware that we need uranium, we need nuclear energy to fight climate change. And so that's an important part of our portfolio as well.
Willem, you wrote the book, The Great Reset. So when you're looking at gold's role in the Great Reset and timing gold's top in this cycle, can you share a little bit about your expectations? Are you in the camp where you just see a hard reset and then everything is revalued up, kind of like what Jim Rickards has talked about, 10,000 gold and more? Or would you see gold topping out and then going back down? And obviously that's going to affect us as gold stock investors.
Well, as you might know, I was very early in calling for a monetary reset, as was James Rickards. Jim Rickards was a very great inspiration for me to write The Big Reset. And when we were calling for a monetary reset, let's say 5, 6, 7 years ago, it only took 5, 6 years for us to wait before mainstream media started to write about a coming monetary reset or coming to structural changes within the international monetary system. Mark Carney, governor for the Bank of England, he gave a speech at Jackson Hole last year, 12 months ago, and Financial Times reported in August last year that Mark Carney called for a global monetary system to replace the dollar. So that tells you that the central bankers are working hard behind the scenes on possible changes coming to our monetary system. And as I wrote in The Big Reset, finding a new anchor for the international monetary system is one of the key elements. But we also can expect debt restructurings. We need debt restructurings, especially after the incredible buildup of the debt we've seen since the collapse of Lehman in 2008. We've seen very strong expanding balance sheets of central banks in the last few months. And what I expect, which was part of my reset thesis in The Big Reset, that one could also expect a revaluation of gold. A revaluation of gold means a devaluation of the dollar. We've seen the dollar heading lower in the last few months. Gold getting quite a bit higher. I think this is only the start of a longer trend. And as I explained in The Big Reset, you can expect a gold revaluation through market forces like we see now, or through the fact that central bankers will choose to revalue gold to a much higher level because they need that to support the international financial system.
So do you see gold going back down before that happens? I mean, could it be the next cycle? Because some of us gold bugs, myself included, didn't think we would be in 2020 and have only $2,000 gold.
Yeah, well, of course, we all know that the targets for gold in a gold revaluation could go as high as $5,000 or $10,000 per ounce. The current price of gold is around 2,000. Could be just a start, but there's one risk, I think, for precious metals investors, and we could have one more market panic. We could have a very depressed autumn and winter this year because of everything going on in the economy. And once we get a restart of a bear market, we see this very high valuations on tech stocks, and that could develop into a crash again. And during such a crash, I could envision that gold go down one more time in a serious way, maybe to $1,500, maybe to $1,000. But I think the forces playing out for gold going much higher, those forces are much stronger now. And there are so many people around the world, so many investors, especially general investors, who are waiting for a great entry point for gold. So I think every correction will be short-lived and every correction will be bought. And I think many people will be surprised by the incredible rally, which is, still about to happen. I think it's only the very first part of an incredible rally we'll see in precious metals.
And Willem, in the reset, do you see cryptocurrencies playing a role in the reset at all, or just primarily gold and silver?
No, cryptocurrencies it's a different beast. And of course, the cryptocurrencies, they all came out of nowhere. Bitcoin has proven itself as a very valuable store of value, has been tested for over 10 years now. Because of the rise of Bitcoin, we saw all the shit coins arriving, the 2,000-3,000 coins. Everybody was starting to, everybody was trying to become rich quick. Because of the whole crypto success and failure, central banks have been very closely monitoring the whole crypto space, and they have started to build their own cryptocurrency. So we should say they start to build their own central bank digital currencies. I think the central bank digital currencies which are being developed now are more a digital version of fiat money and aren't real cryptocurrencies. And it's a big question mark whether the central banks will accept the success of Bitcoin as a store of value. Of course, they can't do a lot to move people away from Bitcoin. And I think it's a fascinating fight we see now between the crypto community and the central bankers. And as long as there are a few countries like Liechtenstein and Switzerland who allow crypto initiatives, who allow crypto funds to being developed, working with the support of the national regulators, I think it will be very hard for countries like the US to fight the Bitcoin revolution.
And Willem, as we conclude here, are there any investments you're making outside of the precious metals, cryptocurrencies, or mining stocks?
I tend to be very selective myself. I like a little of real estate. I like physical gold and silver and platinum. Platinum has been a new investment for me. I think platinum is at a very interesting valuation. I tend to invest in some startups myself, but I think the valuation in the startup scene is much less attractive than the valuations in the commodity space. So I'm very selective myself, and I think we'll have some hard times in front of us from an economic point of view, and people should keep quite a bit of cash on hand and to hedge their risk by owning quite a bit of physical gold and silver.
Excellent advice. If you aren't doing so already, I encourage you to follow Willem on Twitter. He can be found at WMiddelkoop, at WMiddelkoop, or if you're interested in learning about his fund or reaching out to him in that regard, go to cdfund.com, and I'll put links to both of those in the show notes. As always, Willem, I really appreciate your insights, and thanks for coming on today's show.
Thank you. It was a pleasure.